Hello and welcome to today's trading live session. Good morning, good afternoon, good evening, depending on the place you are watching this video from. So today is Sunday and we are going to be analyzing the synthetic market, analyzing every pair using pure technical analysis and checking every single pair on the synthetic market, starting from the volatility index and the synthetic indices. Okay. And if today is your first time of joining our live, do well to subscribe and don't forget to join our Telegram channel where we share more updates and tips on the synthetic market. Okay, so without doing much, I'm going to share the screen with you right away so that we'll do all the analysis together. Whenever we see our setup, we'll wait for it to come so that we can execute. And if you don't see, I believe there's one or two things everyone can learn from today's analysis. So let me share the screen now and do the analysis step by step. And don't forget, if you have any question or anything is confusing you, all you have to do is to ask your question in the comment and I'll do it to answer you. Okay, so let me share the screen right now. Let's get started. So once we are here, we are on the Deriv trading view. So on this Deriv trading view, we are going to be checking because all the pairs are added on my watch list. Okay, I added all the volatility indices to my watch list and then all the step indices to my watch list. So what we are going to be checking now is starting from the first pair on our list, which is step 100 all the way to V20 volatility 25 index, right? So that's what we are going to be doing this morning. So first of all, let's start from volatility 20 volatility, the step index 100. Okay, the step index 100. We are going to be checking it out, what it does for us today, and we are going to be analyzing, we are going to be taking whatever trade it gives us. Okay, so as you can see, first of all, you might be seeing some marker already that already have. Okay, so this was yesterday analysis, so I'm going to be clearing them and also going to go again with every explanation step by step so you can follow up with what I am doing now. First of all, before I start the analysis, I always like to introduce the model we trade on this channel, which is the advanced market structure, also known as the algo market structure. Okay, so it has something like this, whereby we have liquidity. Basically, we trade liquidity. Okay, so this is what we always look at for in the market. Okay, we always look out for this pattern like this, where price will create a high here, which is known as transactional liquidity. Okay, and we always expect price to sweep this liquidity, which is right here. Once price sweep this liquidity, now this becomes a protected high. Okay, that is protected. Price doesn't need to come and take it out again. And then we have price to come and break this low. Okay, once price break this low, this becomes our first break of structure. Now this is our first break of structure. This is sweep of liquidity. Okay, this high has been sweep. Okay, and this is liquidity. So this liquidity is called transactional liquidity, which is used for correction. And then we have price retrace 50% to give us another liquidity. This one is called the structural liquidity, which is used as our continuation, and then we expect price to be slow again to give us our second break of structure. Okay, which is this. Okay, and after this, we expect price to come and take out this structural liquidity so that price will continue to the opposite direction. Remember, this liquidity right here is used for continuation. So once price take it out, price will always continue to the what opposite direction. Now price will come to this zone, take it out, tap into this point of interest, and then continue to the opposite direction. So that is basically it. Okay, so this model, this system we trade, it has what? It has 5 rules. So rule number 1, there must be a sweep of liquidity, which is this. This is the sweep of liquidity that we have as rule number one here. Rule number two, price must take out the newly created low to give us our first break of structure, which is this. So rule number one, there must be a sweep of liquidity. Rule number two, price must take out the newly created low to give us our what? First break of structure. And rule number three, price must retrace 50% to give us our structural liquidity. You can see that after price take out this newly created low, giving us our first break of structure, it retraced 50% to give us our structural liquidity. Okay, let me mark it all over again. So this is rule number one. This is our first sweep of liquidity. This is rule number one here. And then rule number two, we have price retrace 50%. Price retrace to take out this newly created low, giving us our first break of structure. This is rule number two. And rule number three, price retrace 50% to give us our what? Structural liquidity, which is used for continuation. Okay. And rule number four, price must take out the newly created low to give us our second break of structure. So once price gives us two break of structure, our setup is now called an A plus setup. All right. So this is it. Rule number one, sweep of liquidity. Rule number two, first break of structure. Rule number three, price retrace 50% to give us structural liquidity. Rule number four, price take out the newly created low, giving us our second break of structure. Okay. And then rule number five, which is this. Remember, price needs to take out this liquidity and continue to the opposite direction. That is why price retrace and take out the newly created liquidity. And you see it continue to the opposite direction. So if you are taking this trade, this is your POI, point of interest. Price take out this structural liquidity and continue to the opposite direction, which means it matches your target. Okay. So right now, this is point of interest, our point of what? Interest. And then this is what happened. This is the whole idea behind it, which is this. So this is basically everything. All right. Rule number one, sweep of liquidity. Rule number two, first break of structure. Rule number three, another liquidity, which is called the structural liquidity. Rule number four, second break of structure. Rule number five, price tap into your POI and continue to the opposite direction. So you basically what to do is that once you see this on the 24-hour time frame or the weekly time frame as our directional bias, okay, we'll scale down to the 4-hour time frame and 1 hour time frame to look out for this same structure on the 4-hour time frame or 1 hour time frame. And once you find it on the same 4-hour time frame, now we know that price is starting from this point A here, which is the POI, and then the finish point is going to be the new low. Okay, so we are going to start taking, because one thing with this advanced market structure is that you majority of the trade you take is continuation setup, because you already know your direction from the higher time frame. So the next thing for you to do is to start taking continuation setup until price take out your target. So this thing you look out for on the higher time frame. This is what you are going to be looking out for on all the time frame, from the higher time frame to the hourly time, from the daily time frame, weekly time frame to the hourly time frame, and then you scale to the 15 minutes, 10 minutes time frame and still look out for this same pattern. Okay, so I believe you all get a clearer understanding if you are joining for the first time. And if you still don't understand, you go to the playlist of this channel and check the advanced market structure where I explain everything, where I explain about point of interest, explain about top-down analysis, and explain about the market structure. So this is basically top-down analysis. You're always going to be checking the trend from the higher time frame to the lower time frame, where price is coming from, and then where price is going to. Okay, so the same thing you do when you want to sell is the same thing you do whenever you want to buy. You look out for the same thing whenever you want to buy. You must have your sweep, you must have your first break of structure, you may have your structural liquidity, you must have your second break of structure, and price must come into your point of interest and continue its move to the opposite direction. So now check out let's start implementing this same thing on the chart, and let's check out what price has for us today. So from step 24, step 100, we are going to be starting our analysis from the daily time frame. On the daily time frame, you can see that the trend is on a bearish move, and we can easily find our trading model on this daily time frame. So what do? We go down to the next time frame, which is like the 4 hour time frame. After the 24-hour time frame, we have the 4 hour time frame. Now let's check out the 4 hour time frame and see if you find what you are looking for on the 4 hour time frame. Then we can anticipate more move on that time frame. So clearly you can see that we have what the first thing that is showing here is our what sweep of liquidity, which is this. We have our sweep of liquidity here, which is this. After the sweep of liquidity, we have our protected high, which is this. And then rule number 2, which is first break of structure, price was retraced back to take out the newly created low, giving us our what first break of structure, which is this. And then price will retrace 50% to give us what our structural liquidity, which is our row 3. And then price will take out the newly created low, giving us what our second break of structure, which is row 4. And rule number 5 is this. Rule number 5 is what we're anticipating. Price need to take out this structural liquidity, tap into the point of interest, and continue to the opposite direction. Okay, so the whole of these zones becomes your what point of interest. So once price take out this structural liquidity, it's going to start moving to the opposite direction. Now, mind you, when price tap into this 4 hour point of interest and it start moving to the opposite direction, you will scale down to the 15 minutes time frame and start looking for this same pattern on the 15 minutes time frame. That time you can start taking trade. Okay, that time you can begin to execute on those time frame until price move from point A, which is the starting point, and take out this low, which is the finish point. Then you know that you don't have any business with it again. Okay, you don't have any business. You are going to, if price tap into this point of interest and start selling, you scale down to the 15 minutes time frame or 10 minutes time frame and start executing more setup on this time frame, on the lower time frame, until this target is taken out. So this is what you're anticipating on step 100. So once price tap into this zone, okay, we're anticipating a move, this same pattern on the 15 minutes time frame, such as this. It will start doing something like this. Okay, and our 15 minutes POI and start selling to the opposite direction. So once price tap into the point of interest, you might anticipate, you might get up to 4 to 3 or 5 continuation setup before price take out the target on the 4 hour time frame. So this is what we anticipate, and this is what is definitely going to happen if price respects this point of interest. So this is basically what is going to happen. This is what we anticipate every single time. Okay, higher time frame, which is which is used as direction, and then we go to the lower time frame, and then we can start taking more entries. Okay, so this is it. So we are going to move on to the next pair on our list, which is V100 index. So let's check what V100 index has for us. Okay, starting from the hourly time, we are starting the analysis from the 24-hour time frame. The reason we are starting the analysis from those time frame is because of what they call top-down analysis. Okay, understanding where price is coming from and then understanding where it's going to. So first of all, we are spotting our row number 1, which is sweep of liquidity, which is here. Which is our row number 1, sweep of liquidity. Row number 2, we have our protected high, which is here. All right. And row number 3, we have our first break of structure. No, this is rule number 2. Rule number 2, we have our first break of structure after price take out the newly created low. Rule number 3, price retrace 50% to give us what? Our structural liquidity. And rule number 4, price take out the newly created low after giving us a structural liquidity, which is this. So this is our second break of structure. And rule number 4, rule number 5 is what you're anticipating. Okay, this zone is our point of interest. POI. Now, price rule number 5, price will tap into this point of interest and start moving to the opposite direction. Now, currently, price is in this point of interest. Okay, price is in this point of interest. So, what is expected of it to do next is you need to start moving to the opposite direction. Okay, now remember this is 24-hour time frame. This is the starting point, and this low here is going to be the finish point. So, price is expected to this is 24-hour time frame. Price is expected to give us a 4-hour continuation. So once price give us a 4-hour continuation, okay, we will scale down to the 15 minutes time frame on 4-hour time on the we'll scale down to 15 minutes time frame on the 4-hour time frame, and then start taking our continuation until price take out its target. Just like I explained on step 100, not quite long. Okay, so this is what is going to happen. All right. Now the price is in the POI. We're anticipating price to start rejecting, give us a 4-hour continuation, and then move to the opposite direction. Start giving us continuation on the 15 minutes time frame, 10 minutes time frame, or 30 minutes time frame. So this is what we're anticipating. Now we are going to be moving to the next pair on our list, which is the 500 index. So what do we have on step 500 index? Quickly, let's rush through it. Step 500 index is bearish on the weekly time frame. All right, bearish on the weekly time frame, and on a daily time frame, it's on a bearish move too. But we need a continuation that aligns with our trading pattern on either the 24-hour time frame, the 4-hour time frame, and the 1-hour time frame. Okay, now that we know where price is going to on the weekly time frame, we are going to look out for a continuation structure on the 4-hour time frame or on the 1-hour time frame. Okay, because trading the synthetic indices market, this top-down analysis is one of the most important aspects of trading because it gives you clear direction on where price is coming from and where price is going to. Okay, so that is why every day we always do top-down analysis on each pair so that we don't get the wrong direction of a particular pair. We understand the trend, where the price is coming from, where the price is going to, and at the end of the day, we ride along with it. Okay, so quickly, let's go down to the 4-hour time frame if you are going to spot our pattern on the 4-hour time frame. On the 4-hour time frame, you can clearly see that we have our row number 1 here, which is sweep of liquidity. Row number 1, sweep of liquidity. And row number 2, we have our first break of structure, which is this. Row number 3, we have price retrace 50% to give us our structural liquidity, which is used for continuation. And then row number 4, we have our second break of structure, which is this. This high here is our protected high, doesn't need to be taken out. And then this zone becomes our what? Point of interest. You see, price needs to take out the structural liquidity and continue to move to the opposite direction, which it just did. Okay, now this is the starting point here, and this zone here, this high low here is our finish point. Okay, this below here is our finish point. This is our starting point, this is our finish point. Now let's go to the 15 minutes time frame and check if we have a continuation on the 15 minutes time frame. So as you can see, currently we don't have any continuation on the 15 minutes time frame. So what are we going to do? We are going to be sitting on our hands until price give us a continuation. Then we can jump on it. Probably something like this in the next few hours. So we're going to be anticipating something like this for our continuation before the price take out the target. So you are going to be anticipating something like this. Hopefully price does that, and if it doesn't, we'll be waiting until that happens. So it's as simple. Okay, start your analysis from the higher time frame, get your direction bias clear, come to the lower time frame and look for entries on the lower time frame. So this is what you're anticipating currently. Once this happens, then you can be then sure that price was going to come into this zone and then sell to the opposite direction. So this is what you're anticipating at the moment. This is exactly what you're anticipating. So price is definitely going to do something like this, and we are going to start taking our sell. Okay. Now let's move to the next pair on our list, which is V31S. Let's check V31S. Let's check what is happening there. Okay. Starting from the 24-hour time frame, we've already marked this out on the 24-hour time frame, which is our row number one, sweep of liquidity. Our row number two here, we have first break of structure. Price retrace into the zone, give us our structural liquidity. We need to give us our row number four, which is this. And then row number five, you can see that price has tapped into this point of interest and the move is continuing to the opposite direction already. Now let's go to the 4-hour time frame and check if price is trying to give us a continuation on the 4-hour time frame before we can scale down to the 15 minutes time frame or 10 minutes time frame. So currently we don't have anything yet on this time frame. Let's check the 30 minutes time frame. On the 30 minutes time frame, we'll be anticipating this setup on the 30 minutes time frame. So once price give us this tap into this POI on the 30 minutes time frame, we can then scale down to the 15 minutes time frame or 10 minutes time frame and look out for our continuation. Okay, we are going to be anticipating this. This is a clear A plus continuation. I hope you all are following. So this is it. We are going to be anticipating this move on the 30 minutes time frame. We anticipate price to tap into this POI and give us a continuation on the lower time frame. Okay. Also give us a continuation on this lower time frame like this. We can be sure to take more entries and the price take out this anticipating currently on V31S because price has already given us a direction on the 24-hour time frame that is coming from. So this is where price is coming from the 24-hour time frame. All right. So it's going to give us a continuation on the hourly time frame, maybe from the 4-hour, 1 hour and 30 minutes. Then we can take continuation on the 15 minutes, 10 minutes, and 5 minutes. So price is going to keep selling until you take out this target here. So this is what it's going to do, and that is what we are anticipating right now. Now, the next pair we are going to be checking out is V90 index. Let's check out V90 index and let's see what's happening on V90. If we find something good, good and fine. So starting from the weekly time frame, V90 is bearish on the weekly time frame, but on the 24-hour time frame, it gives us our trading pattern on the 24-hour time frame. Okay, you can see clearly we have our row number one hidden here, which is first of all we have our sweep of liquidity at this point here. Number one, and then we have our row number two. This is first break of structure. Rule number three, price retrace 50% to give us structural liquidity, which is this. And then rule number four, price take out the newly created low, giving us our second break of structure. And then this is our protected high right here. This one becomes our point of interest. The This zone becomes our what? Point of interest. So we anticipate price to tap into this point of interest and start selling to the opposite direction of which it just did. So price has tapped into this point of interest and is continuing the move to the opposite direction. So what I'm going to do now is go down to the 4 hour time frame and the 1 hour time frame and check if I'm going to see our continuation setup. So on the 4 hour time frame here, you can see that we have our rule number one, which is sweep of liquidity, which is right here. Rule number two, we have our first break of structure, which is right here. Rule number three, we have price retrace 50% to give us structural liquidity, which is here. Okay. And rule number four, we have our second break of what? Of structure, which is here. Now this zone becomes what? Our point of interest. This zone becomes our point of interest. So we're anticipating price to tap into this zone and continue to the opposite direction. Now this is the starting point. And then this zone below, this right here, is the finish point. Okay. Now that we know where price is coming from, the daily time frame and where it's going to, and we've seen our continuation structure on the 4 hour time frame, the next thing we are going to be doing is scaling down to the 15 minutes time frame or 10 minutes time frame and check if you are going to find a continuation on this time frame. So currently, as you can see, on the 15 minutes time frame, there is nothing like continuation at the moment. Nothing is happening at the moment on this time frame. So what we are going to do is we are going to sit on our hands until price give us the continuation time frame we are looking for. Hopefully price does something like this now, because it has already given us our rule number one, which is sweep of liquidity. If it does this, okay, give us rule number one, sweep of liquidity, rule number two, first break of structure. If you give us our rule number three and rule number four, we should be anticipating rule number five and just like this. But if price hasn't done that, so this is what you are going to be anticipating on this move. If that happens, fine. If it doesn't, we'll wait for another opportunity. So there's nothing happening currently on V90 index, volatility 90 index. So the next pair we are going to be moving is V25 index. But before I do that, if this is your first time of joining our live trading section, right, on this channel every day 6 a.m. to 7 a.m. we analyze the synthetic market step by step using pure technical analysis and price action. Okay, so if you are watching this video on replay, do well to subscribe to this channel, follow our Telegram channel, and don't miss out, so that because whenever you subscribe to this channel, you'll be the first to be notified whenever we are going live, because every day on this channel we go live from 6 a.m. to 7 a.m. and this will help you learn more about technical analysis. What you learn on synthetic, the same analysis we do on these synthetic indices is what we do. You can apply it to your crypto, to your currency, and trade any commodity at all, trade any currency pair or synthetic pair or any crypto pairs at all. And this, you're going to be getting massive results. Okay, so if you're interested in learning more about this, all you have to do is subscribe so that you can be following us every morning. Okay, and don't forget to like this video, don't forget to subscribe before you go, and let's continue. So on volatility 21 25 1s, okay, we have two continuation structure we've been anticipating for the past days. Okay, now if you can see clearly, we have our rule number one, which is sweep of liquidity. This has been marked down quite some time. So we have our rule number one, which is sweep of liquidity. We have our rule number two, which is structural liquidity. Now let me unmark all of this and then remark it again. Okay, On the 4 hour time frame, on the 24-hour time frame, price is bullish on V25 1s. Okay, on the 4 hour time frame, we are seeing continuation. So first of all, if you look clearly, we have our sweep of liquidity, which is this. Okay, which is rule number one. This is here is our protected high, protected low. We have our rule number two, which is this first sweep of liquidity. We have our rule number three, price retrace 50% to give us for structural liquidity to be taken out later. And we have our rule number four, which is this second break of structure. Now, what you're anticipating now is rule number five, which is price need to come take out this structural liquidity, which is used for the continuation, and continue its move to the opposite direction. Now, when price starts going to the opposite direction, it's going to give us continuation structure on the 15 minutes time frame, on the 10 minutes time frame, and on the 5 minutes time frame until it take out this high here. Then we'll stop looking for buys. We start looking for buys until it gives us another structure on the 4 hour time frame. Then we scale down to the lower time frame and start looking for our continuation and we start executing. Okay, that is what we anticipate every single time on this channel. So that is what you anticipate every time. Okay, now if price doesn't come to this point of interest, we have another point of interest before this point of interest. Okay, let's mark it out immediately. You can see we have a recent POI here, which is rule number one, super liquidity. Rule number two, first break of structure. Rule number three, 50% retracement. Rule number four, second break of structure. This becomes our what protected high. The whole of this zone then becomes what point of interest. The whole of this zone becomes point of interest. All right. Now, the same thing we just anticipate on this time frame below here is the same thing we are going to be anticipating here. We want price to come into this zone, tap into this POI, and give us continuation on the 15 minutes time frame or the opposite direction. Okay, so price is going to start giving us this more continuation on the 15 minutes to 10 minutes time frame. All right, and then we are going to be taking more trade till price take out these targets. So this is basically what we do every day, and you can see it's quite simple. Okay, now let's move on to the next pair because currently we don't have anything here because price hasn't come back to our point of interest for us to start looking for continuation on the lower time frame. So let's move on to the next pair on our list, which is V75X, volatility 75 1S. Okay, and this is your first time of joining and you want to trade with the broker we use. The trade is called a Deriv Indices. You check the description of this video, sign up on Deriv Indices, make your deposits, and let's take the same trade. Everything, deposits, withdrawal, they are all fast, and you can only find these volatility indices pairs and the step indices pair on only the Deriv broker. It's only Deriv that offer those pairs. Okay, so if you want to trade the same thing, use the link in the description to get your own account today. So on the V75 1S, starting the analysis from the higher time frame to the lower time frame. On the weekly time frame, the trend is very bearish on the weekly time frame. Okay, but on the daily time frame, price has given us our continuation on the daily time frame. And clearly you can easily spot our rule number one, which is super of liquidity. Rule number two, we have our first break of structure, which is this. And rule number four, we have rule number three, we have price retrace 50% to give us what structural liquidity. And rule number four, we have this second break of structure, which is this. All right. And this zone becomes what our points of interest. This zone becomes our point of interest. So price is going to start selling from this point, okay, down to this point. So basically, this is our starting point, and this right here is our finish point. Now that we know where price is coming from on the 24-hour time frame, let's get down to the 4-hour time frame and check if you are going to find a continuation structure on the 4-hour time frame. And on the 4-hour time frame, we've gotten a continuation structure on the 4-hour time frame, which is sitting pretty here, which is number one, we have our sweep of liquidity, which is rule number one. Rule number two, we have our first break of structure, which is this. Rule number three, we have price retrace 50% to give us structural liquidity. And rule number four, we have our second break of structure to make this an A plus setup. And then this high right here is our protected high. Okay. Now the whole of this zone becomes what our point of interest. So price is expected to tap into this point of interest and continue the move to the opposite direction. Now, why it's moving to the opposite direction? This same pattern we look at for on the 4-hour time frame. We are going to start looking for it. We're going to start looking for it on the 15 minutes time frame, 10 minutes time frame until price take out this target. So this is what we are going to be looking at for. So currently we don't have anything on V75 index. So the next pair we are going to be checking out is V15 index. Let's check out what's happening on V15 index. If you are going to find something worthy, we are going to be taking it. Alright, starting from the 24-hour time frame, you can see that V15 index is heavily bearish. Okay, so currently we can't find anything tangible on the hourly on the 24-hour time frame. So let's get down to the 4-hour time frame and check if we are going to find something there. So on the 4-hour time frame, you see that price just gives us one of the things we have been looking for, and it has smashes the target. Okay, you can see our rule number one, which is this, a previous point of interest that has been used. Rule number one, sweep of liquidity. We have rule number two here, which is first break of structure. And rule number three, price retrace 50% to give us our structural liquidity. And rule number four, price was give us protect. These are protected high. So rule number four is this second break of structure, which is this. Okay, and this zone becomes what our point of interest. This zone becomes our point of interest. So price tap into this point of interest and continue the move to the opposite direction. It always respects it. Price always respects it. Now price move on to the opposite direction. Okay, this is it. You see that it's take out the target. So if you scale to the 15 minutes time frame on this, when the price was moving, you will see series of sell, series of sell until price take out this target. That is why you need to know your direction from the hourly time frame. So once you know that the direction is coming from this 4-hour time frame now, and you scale to the lower time frame, you'll be rest assured that price is going to respect your buyers until it take out this target. Okay. The only time price will stop respecting your buyers is when you take out this target and you are still selling on the lower time frame. A reversal might happen and then you start taking losses because what? You're no longer respecting the top-down analysis. You're no longer respecting the structure. So after price has used this POI, the next POI we are seeing clearly, the recent POI here is this. You can easily spot our row number one, which is you see price giving us our row number one sweep of liquidity. Okay. Now this is our row number two, which is first break of structure, which is this. Which is this. And then row number three, we have price giving us structural liquidity, which is this. Okay. And then this zone here becomes what? Our protected high. Alright. This First sweep of liquidity, first break of structure, second liquidity that is here that need to be swept out and continue to move to the opposite direction. And this right here becomes what? Our second break of structure. The whole of this zone becomes our point of interest. Now price is going to move to the opposite direction, which is going to be this. Price is going to take out this structural liquidity and continue to move to the opposite direction. Now once it's coming down on the opposite direction, it's going to start giving us a series of sales continuation until price take out this target, which is down below here. Okay, it is below here. The next pair on our list we are going to be checking is what? V10S. V10S. Okay. You can see that on the weekly time frame, V10S is bullish on the weekly time frame. It hasn't smashed its target yet. And on the 24-hour time frame, there is a deep retracement on the 24-hour time frame, which is trying to be this. On the 24-hour time frame, price is trying to retrace now after giving its deep retracement. Now let's check the 4-hour time frame if price has something that we can anticipate. Okay, because on the weekly time frame, 10S has not smashed its target yet. And let's check the 4-hour time frame. If there's something we can really anticipate. On the 4-hour time frame is not clear. So let's check the 1-hour time frame if you are going to see something more clear on that time frame. Okay, good. So if you're on this live yesterday, I was anticipating a move and price is trying to do that. Okay, so first of all, we have our row number 1, which is this sweep of liquidity, and then we have our row number 2, which is this first break of structure, right? Row number 3, price retrace 50%. This is the 50% now, and this zone becomes our what? Protected high. So what we're anticipating price to do now is price to move like this, take out this newly created high and give us our second break of structure, and then come back to this zone and start giving us our sell, our buy continuation like this. Okay, start giving us our buy continuation like this so that we can start buying, right? So this is what you are currently anticipating. Okay, hopefully price does that, and then we are going to have a very sweet buy on V10S. So this is it. If this happens, good and fine. But if it doesn't, we are going to still be anticipating this move. Alright, so this is what you're anticipating currently. Now let's move on to the next pair on our list, which is next pair on our list, which is which pair? Let's check it out. We have V75. Next pair on our list is V75. Let's check what's up with V75. Now the V75 starting from the weekly time frame is bearish. It's heavily bearish. So bearish on the weekly time frame. So now we don't have anything on the weekly time frame. Now it's just being bearish. Let's check the 24-hour time frame. Same thing on the 24-hour time frame is bearish. Let's check the 4-hour time frame if you can find something tangible on the 4-hour time frame. On the 4-hour time frame, you can easily spot our system here. Rule number 1, we have our sweep of liquidity. Rule number 2, we have our first break of structure, which is this. Rule number 3, which is our first price retrace 50% to give us structural liquidity. Rule number 4, we have price retrace about to take out a newly created low, giving us our second break of structure. This becomes an A+ setup. Rule number 1, sweep of liquidity. Rule number 2, first break of structure, price take out the newly created high after sweeping the liquidity. Rule number 3, price retrace 50%, giving us our structural liquidity to be taken out later. Rule number 4, price take out the newly created low to give us our second break of structure. Now, what you're anticipating now is rule number 5. Okay, rule number 5 is what completes everything. So once price give us rule number 5, we anticipate the price to move come into this zone and give us continuation on the 15 minutes time frame. All right, give us continuation, series of continuation until this target is taken out. Then we know that okay, we are done with V75 index. So this is what we are anticipating on V75 index. Hopefully this happen within the next few days, and then we will have opportunities. Okay, now let's move on to the next pair, which is step 300. Step 300. Let's check step 300. What is happening on step 300? On the weekly time frame, step 300 is on a bearish move. On the 24-hour time frame, it's not giving us anything currently on the 24-hour time frame. It's just retracing back, right? We have a sell here that smashes the target few weeks ago, and since then we haven't cut the 24-hour time frame. We haven't got anything tangible since that time. Okay, we haven't got anything tangible on this pair since that time. So we are going to be anticipating one move because one price tapped into this 24-hour time frame few weeks ago. If you scale down to the 4-hour time frame, price gave us series of continuation on the 4-hour time frame, and then on the 15-minute time frame, there were more sales. Now, price has taken out the target. We can no longer sell. Okay, until it give us something continuation on the 24-hour time frame or the 4-hour time frame, then we can scale down to our lower time frame and take more sell. But until then, we are going to be sitting on our hands because if you are doing top down analysis, if you don't have a direction on a trend, just like you are just going somewhere you don't even know. You are just walking on the road without having a destination. Okay, so price must give us a starting point and a destination before we can start taking trade on any particular pair. So currently there's nothing on step 300. So let's check step V50 index, volatility 50 index. Let's check what's happening on that pair at the moment. Okay, starting from the 24-hour time frame, volatility 50 index is bearish, and on the 24 weekly time frame is bearish, and on the 24-hour time frame it gives us the continuation on the 24-hour time frame. So if you see clearly, we have our row number one, which is here, sweep of liquidity, and we have our row number two, which is first break of structure right here. We have our row number three, which is price retrace 50% to give us structural liquidity. And we have our row number four, which is second break of structure. Price take out the newly created low to give us our second break of structure. Now this is our protected high that price shouldn't take out. Now the whole of this zone is what our point of interest. After this point of interest, we have price continue to move to the opposite direction. Now this is going to be the finish point on this 24-hour time frame. Now that we have this direction, let's scale down to the 1 hour time frame or the 4-hour time frame and check. So on this 4-hour time frame, there is a zone here that has already been used. So this is none of our business anymore. Okay, there's a zone here that was used earlier. So this is not our business anymore. Ship of liquidity, first break of structure, structural liquidity, second break of structure, price retrace, take out this liquidity, continue to move to the opposite direction. This was the target, and price did what price took it out. So now we are going to be anticipating the next recent price action. So let's go to the 1 hour time frame. On this 1 hour time frame, you can see clearly that we have our row number one, which is what sweep of liquidity. We have our row number two, which is what first break of structure. We have our row number three, which is price retrace 50% to give us what structural liquidity. And then we have our row number four, price retrace to take out the newly created liquidity, strip it out. So this is our second BOS break of structure. First break of structure, second break of structure, first sweep of liquidity. This liquidity too is going to be sweep out, and the move is going to continue to the opposite what direction. So the whole of this zone becomes our what point of interest. Now this is our point of interest. So we're anticipating price to come into this zone and give us a continuation setup on the 15 minutes time frame, and then we can start taking sales until price take out these targets. Okay, so once price come into this zone, we know that this is going to be our starting point, and this zone right here is going to be our finish point. Okay, this is what you're anticipating on V50 index at the moment. Now let's move on to the next pair, which is V100 index. Let's check out V100 index real quick, and let's check what it has for us today. V100 index is bullish on the 24-hour time frame, bullish on the weekly time frame, and on the 4-hour time frame is doing something beautiful that I have been anticipating. So now let's check it out. On the 24-hour time frame, we have a continuation. So I'm going to start marking the recent set POI on the continuation right now. So on the 24-hour time, on the 4-hour time frame, we have our rule number one, which is this. Let me just go to the 1 hour time frame so that you all can see it clearly. So this is our rule number one, which is this. Okay, let me go back to the 4-hour time frame. You can see it. So I want everything to be displayed on the screen. Okay. First of all, we have our sweep of liquidity, which is rule number one here. Sweep of liquidity. This is it. Then we have our rule number two, which is first break of structure, which is this. Okay. Now price retrace 50% to give us our structural liquidity. The price does that? Yes. Let's check it to be sure using our Fibonacci retracement. Okay, marking it from the protected low to the first to the next high, which is our second break of structure. If it's up to 50%, of course it's up to 50%. So this is valid. So price has retraced to give us our rule number three, which is structural liquidity used for continuation. And then this price taker the newly created high, giving us our what second break of structure. And this is our protected low, right? Now the whole of this zone becomes our what point of interest. These are point of interest. So this point of interest now is what you're anticipating price to come back to, and then start giving us series of buys on the lower time frame. So anticipate price to do its stuff, move, come to this zone, and start giving us series of buy on the lower time frame, so that we can start taking more buys here. Okay. So this is what you're anticipating currently. So price is going to do that, of which you are very sure of. There's higher probability that price has been doing that for time memorial and is going to still be doing that again. So this is what we are going to be anticipating. So once price tap into the 4-hour zone to give us continuation on the 15 minutes time frame, 10 minutes time frame, or 5 minutes time frame, we can start taking our buys. Series of this, like 3 to 4 of it, before price take out these targets if it's going to start rejecting from this point. Okay, so this is what you're anticipating on V100 index. Okay, but price hasn't done that yet. So this is the recent point of interest, and this is another point of interest below here. If you have been following me, you can use your eyes to mark it out. This is our sweep of liquidity number one. This is our second row, first break of structure. Price decrease 50% to give us another structure, to give us another liquidity, which is structural liquidity to be taken out. And price take out the newly created low, giving us our second break of structure, and this below is our protected high. So what you anticipate here, if price doesn't respect this zone, there is high chance that price will respect this zone and still do this same thing that market. Still come and do it here. Okay, it's still coming to come and do this here, so that we'll take more buy to the opposite direction. All right. So now we are going to be moving on to the next pair, which is on our list. Let's check it out real quick because we are running out of time. So this is step 200. The next analysis volatility is step index 200. Okay, step index 200. Currently, the price is on the 4-hour time frame, but it's selling. Okay, the trend is on a bearish move at the moment, but it doesn't have any clear direction on the 4-hour time frame. So we are going to be doing an analysis from the 24-hour time frame, focusing only on recent price action. Okay, clearly we can see we have our first row here, which is sweep of liquidity. Our second row here, which is first break of structure. Our third row here, which is structural liquidity. Our fourth row here, which is second break of structure. What is the next thing? What is the next thing we're anticipating? Next thing we're anticipating is our what? Fifth row, which is this. Price needs to tap into this point of interest. Remember, this is the 24-hour time frame structure. So once price tap into this point of interest, we are still going to anticipate another structure on the 4-hour time frame or on the 1-hour time frame. Okay, so take for example, this is 24-hour time frame. Now price has given us another structure on the 4-hour time frame. Once price gives us this on the 4-hour time frame, we can then scale to the 15 minutes time frame or 10 minutes time frame to start looking for our continuation. If price doesn't do that, do not attempt to take any sales on after price give you a direction on the 24-hour time frame. Okay, there's a reason for that, and the reason is because price need to align with your hourly time frame after you got in the direction in the higher time frame. So you be sure that your win rate will be okay. Okay, because on this 24-hour time frame, a little retracement is going to take you off guard. It's going to stop a little retracement on the 24-hour time frame or the weekly time frame. It's going to have a lot of effect on your trading account, which is not something you would like. The stop loss is going to be high, though your profit is going to be more, but to be on the safer side, you need to start taking quality of trade instead of jumping on the higher time frame. Okay, because it might take days for price to even take your target out. Take days, weeks, could even be months. Okay, so currently this is what we're anticipating on step 200. So let's check out the next pair, which is step 400. Step 400, we are going to start our analysis from the 24-hour time frame. On the 24-hour time frame, step 400 is bearish. On the weekly time frame, it's also bearish. Now let's check out the 4-hour time frame and see if we have. On the 24-hour time frame, is bearish without giving us our structure. On the weekly time frame, is bearish without giving us our trading structure as well. So let's check out the next time frame on our list, which is 4-hour time frame. On the 4-hour time frame, we can't see anything tangible on the 4-hour time frame. Some people might be asking me, is this not supposed to be our structural liquidity if this is our sweep of liquidity or this is our sweep of liquidity and first break of structure? Now, the reason why this is not going to be valid is if you use a Fibonacci retracement, you are going to check if this is up to 50% retracement. Is it up to 50% retracement? Of course, it is not up to 50% retracement. This would have been valid, a very good trade, if this is up to this point like this. Well, of course, it is not. So if it is up to this point on the 4-hour time frame and price just took it out like this, and you see that it started selling to the opposite direction, now we can start scaling down to the 15 minutes time frame and we be sure that okay, this is our starting point and this below is our finish point. But unfortunately, that is not what is happening right now. Okay, the structural liquidity is not up to 50%, so we are going to be avoiding this pair at the moment until it gives us exactly what we want. Okay, until it gives us exactly what we want, we are going to be passing it. So let's check the next pair. So currently we haven't gotten any setup at the moment. Let's check the next pair, which is V51 index. Okay, starting from the weekly time frame, V51 index just matches its target on the weekly time frame. Okay, just matches its target on the weekly time frame. It has something like this for the past how many days? Mm, it has been bullish for the past how many days? This is what it has on some weeks ago. We have this. we have something like this some weeks ago, and it has this is like on the weekly time frame. This is what V50 has on. So this was first sweep of liquidity. We have first break of structure, a second break of structure, and then this was our POI on the weekly time frame. The reason why I'm drawing this is because on the Deriv synthetic indices, okay, on on Deriv trading view, you can't see more than the 24-hour time frame. So that's the highest time frame. So price tap into this point of interest on the weekly time frame on V50 index, okay, and this was the finish point here, and you can see price tap here give us series of 24-hour continuation, 4-hour continuation. We take more sales, a lot of sales on the 15 minutes, 10 minutes until price take out the target. You can see price has already taken out the target. So this is what we had. This is exactly what we had few weeks ago, and it's been a good ride so far. But currently there's nothing again. So now that price has taken out the target, let's check the 4-hour time frame if we find something on the 4-hour time frame. A move that we can anticipate on the 4-hour time frame. So let's check the 4-hour time frame and see if you're going to find something. So on the 4-hour time frame, nothing is really happening on the 4-hour time frame. It's just consolidating at the moment. So clearly there's nothing happening on the 4-hour time frame. So go to the next pair on our list, which is V25 volatility 25 index. So on V25, what do we have on V25? So on V25, on the 24-hour time frame, the trend is bearish. On the weekly time frame, it's also bearish. So now that we have known that okay, the direction on the weekly time frame is bearish, let's go to the 4-hour time frame if you are going to see our system, and then we'll mark it out. Or if price is reacting from a particular point of POI, you're still going to mark it out. Right. So now we have this on the 4-hour time frame. Let me go to the 1-hour time frame if I can see anything more clear on that time frame. So on the 1-hour time frame, we have a trend, we have a move. Okay, this is going to be good. So we have our rule number one, which is sweep of liquidity, and we have our rule number two here, first break of structure. We have our rule number three, protected high, and then we have our rule number. This is not part of our rules, but this is protected, and price doesn't need to take it out, just like SL when you're taking trade. So this is rule number one. Rule number two, rule number three is structural liquidity. This is our rule number three, and this right here is our rule number four. Let's check this. It is up to 50% retracement. Okay, it's up to 50%. Now what we're anticipating right now is price to come into this POI, point of interest, and give us continuation on the lower time frame, which is going to be something like this. Come into this zone, give us continuation on the lower time frame until this target is taken out. So this is what we are going to be anticipating on V25. Okay, so we've analyzed 14 pairs so far, which is starting from step 100, V100, step 500, V30S, V90S, V25S, V75S, V15S, V10S, V75, step 300, V50, V100S, step 200, step 400, V50S, and V25. So we haven't gotten any setup on it, and a lot of things we are anticipating at the moment. Hopefully, when price does that, you are going to be taking more trade. And this is why you need to be in the Telegram community, where I'm going to be sharing more updates on any pair that's giving us anything we're anticipating. So from there, you can learn more of those things. You can learn more of our analysis. And if you are new to this channel or you're watching this video on replay, do wait to subscribe. So when I go live tomorrow, you'll be able to get notified. All right. So on this channel, we go live every day, 6 a.m. to 7 a.m. And today we've come to the end of our stream. All right. See you guys same time tomorrow, 6 a.m. to 7 a.m. And I'll see you on the other side. Bye for now.